This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe. We're going to talk about the pullback trade today, and I'm going to use a daily and an hourly. I had a specific request, and I am going to talk about Tesla and kind of what's taken place, at least based on using a daily and an hourly over the course of the past 6 months, and show you some of the setups that I think were very attractive based on the way I look at things. I wrote a book called Invest Like a Pro. In there, I describe a 2 time frame pattern that I think is it happens in all time frames. If you can look at 2 consecutive time frames side by side, you will see this pattern happen on a regular basis. There's a lot of individual things that go into this specific setup that I talk about in the book that can really increase your odds, talking about ADX, talking about MACD. Today, I'm going to focus mostly on the pullback trade and the actual trigger setup that gets you in the pattern, and show you how I would handle it from a mechanical standpoint in terms of where the stops would go. So hope this is helpful. If you like this type of information, please hit the like button. And if you're not a subscriber yet, please go ahead and subscribe so you can get notifications for anything new coming along the pike. I do videos on both Tuesdays and Fridays. And on Tuesdays, I do something related to trading. And on Fridays, I do a video on the market. So let's go ahead and get into this. I'm using Tesla based on the requests that I had. And I've got all 4 time frames here: monthly, weekly, bottom right, and then a daily in the upper right, and an hourly in the upper left. So this is going to be focused on the daily and the hourly, this video. But I do think it's important, and I've mentioned this in my S&P videos talking about the market, that you want to know what time frame is in control of any given stock. If you're looking to trade a stock, typically there's one time frame that is really the trending time frame, and you need to go find which one that is, and then you can determine how you want to handle it. So just to give you an idea, if your daily time frame is the one that is showing the good trending conditions with good momentum conditions associated with it, then I would consider that to be your trending time frame. And then you want to look at the weekly chart, and then you want to look at an hourly chart. You go one above and one below. I talked about going above on the last video, and just want to be aware. Actually, it was 2 videos ago where I talked about knowing what that upper time frame is doing. In this particular video, I want to talk about the 2 time frame setup. And the interesting thing about Tesla is, you can consider the monthly chart to be trending, but it's really not. It's kind of in a vertical move to the upside. I mean, it's a bullish trend, don't get me wrong, but it's more of almost like a blow off. It's not really what I would consider to be a tradable trend. I do think the weekly chart has been a tradable trend this year. You had a couple of nice pullbacks over the course of, say, the last, really during 2020. And those setups have kind of come and gone now. Now it's really a little too far away. It would take some time for this to set up again. If I go to the daily chart, clearly it's in a trending condition because you got the 18 above the 40, both lines rising. And notice that the MACD and the ADX are showing good confirming criteria associated with the trend. So I would be going and looking at this daily chart. Now, the specific time frame that I was asked about was the pullback back for Tesla was right here on 12/9 of 2020. I'm going to talk about the pullback there. I'm going to talk about the pullback not long after that, which took place, and pullback to the 18. And then I'm also going to talk about the one right here. So let's go ahead and get into that. I want to show you, and I'm going to zero in on the hourly chart because what I want to do, let me just make sure you understand. On the daily chart, we have this condition in place through this period here where 18 is above the 40, both lines rising, good momentum conditions.
conditions, and then we started to pull back towards the 18. And when that happens, as I've said multiple times in other videos, we want to go down one time frame lower and look for an opposing trend trade. So let me go ahead and pull up the hourly. Now that vertical line right here represents that pullback on the daily chart. So this is right around the 12.9 is actually right here. So this is 12.10 and then 12.14 right into this zone. So the way I would look at this is during this initial drop and even this big drop here, there's not a whole lot I can do because I am waiting for some sign on this time frame that the 18 has crossed down below the 40, or at least that the 18 has met up with the 40. That's kind of my minimum criteria. Once that happens, then I'm going to start looking for some signs of a trigger, either based on MACD or based on price moving back above both moving averages. And in this case, we had the big violent drop, and then it rallied up and failed at the 18. And when it came back down, the 18 crossed down below the 40 right here. And so, you know, if I'm looking at this, you had the big drop to here, and then you rallied up and failed at the 18. And then you had the drop here, and that's where the 18 crosses down below the 40. And you have your basically your first opposing trend trigger in the new in this last move. And this bar right here, this move to the upside, which is right on this green bar crossing back above the 40, is your entry for this signal. Now, when that happens, I'm going to put a stop. Either it's going to go underneath the last swing low, or I'm going to go all the way down to the last reversal bottom down here underneath this low. And this is really a personal preference. Some people like to use a tighter stop, and if that happens, they're going to hit targets quicker. But they also, in this type of volatility, could get stopped out a little easier. Whereas if you use a wider stop, you might not hit a target as fast, but the potential for you to stay in the trend longer is increased. So it is a personal preference. It kind of depends on how much you like the higher time frame as to how you want to trade it. If you really just want to get in, you know, over the next few days and get in and out, do it quickly, I would recommend this interim stop here. If you're looking to kind of catch the trend and maybe participate on what the daily's doing and be in it longer for even several weeks or potentially a month or two, I would suggest using the wider stop. I think that's going to work better in your favor in this instance. So in this case, because this stock is so volatile, again, the entry is here. And again, that means that the reason why that's taking place is because the 18 crossed down below the 40. At that point now, I know I have pulled back enough on the daily chart to really set up a new pattern or a new signal. So that's kind of my criteria. And I know I'm looking at an hourly chart and saying that the pullback's on the daily, but the reality is you're looking for the entry on the daily chart and you're using the hourly chart for your timing. And so what the hourly chart does is it tells you when you've worked off the overbought condition on the daily by waiting for this 18 to cross down below the 40. And sometimes it takes patience. And there are times where you miss a move, where the move will be too quick and it'll just take off again without that criteria taking place. And I'm willing to accept that and look for the ones that actually meet my criteria. And I think if you do that, you're really in a pretty good spot, because you're gonna see this pattern develop over and over and over again over time if you're looking for it and if you have enough stocks that you're watching. What's interesting about what took place here, I think what would have happened either way, no matter which stock, whichever stop you used, I believe you would have hit a target by the time this rallied up here. And then when it pulled back, because it was so volatile, it had a really strong pullback, I think you would have been stopped out on the balance either way. So what that means is that you have to keep looking. If the trend is still okay on the daily chart, so that was back in here and you might have been stopped out. If the trend is okay, you continue to look for the next setup. And the next setup took place, right here as this was starting to pull back again towards the 18. If we go and look at that on the hourly chart, you can see that was taking place, that pullback was taking place right here. And then you actually got the 18 crossing down below the 40. And then look at this big green bar. That was the signal to get back in on this trade right here. Now, on this trade, if you put the, if you buy on this bar, your stop could go below this big kind of wide range bar here, or it could go below the low of the pullback. So either way, you have kind of the ability. In this instance for me, because this was just a single bar reversal, I probably would not have used that. I would have used this wide, this pullback low. And then from there, I would have gone to look to take targets based on the distance between my entry and my stop. And this would have turned into a pretty big winner. So if we keep following along, I want to go back and look at the daily. So now let's look at this. So we now have a situation on the hourly where the 18 is below the 40, if you notice, and MACD has come back down to the 0 line. But let's look at the daily chart. Notice what's taken place here. So on both of these prior pullbacks, you had a pullback close to the 18. Not right. The first pullback wasn't right to it. The second one actually came down and touched it. But they were both pretty in close proximity to the 18. If you look at what's taken place so far, this has gone sideways for 3 or 4 bars, but it really hasn't pulled back anywhere near the 18. So I'm not as interested in doing this trade, even though it does meet the criteria. Momentum is good, strong condition. You've got a pause, not really a pullback, but a pause. And the pause has been long enough on the hourly chart to cause the 18 to cross down below the 40. For me, and again, I can be picky because I know I can go and find 10 or 12 stocks that are meeting the criteria that I'm looking for at any given time on an hourly, a daily and hourly, in most cases, in most markets. So in this case, I'm probably not going to take this trade because it's too far away from the daily 18. I'd rather get something a little bit closer to the 18. And I think that really goes back to some of the videos that I've mentioned with respect to pullback risk. And we want to avoid that as much as possible. So I'd like to see this actually come down a little bit closer to the 18. And then if the hourly gives me the conditions that I'm looking for and gives me the setup and trigger that I'm looking for, then I'm willing to take that. So I hope this makes sense. Please keep posting any questions that you have. It's been some really good comments and some really good questions. Please continue to do that. And we'll see you next time.